First rates then on your screens. It seems like it's going to be a quiet one, and a quiet one it is to start off trade with this morning. And that's the Nifty rate for you on your screens. We're clinging on to 10,050, 10,052. It's an absolutely flat start. Flat it is for Reliance Industries as well, as the rights issue goes by, and rather successfully. Well, there was no denying that one. The broader market, I have to say, at least on the first flash, is actually outperforming the benchmark indexes. That's where you're seeing bigger traction come in. It's about 759 stocks within the NSE actually holding up, as opposed to 257 to the declines. While Reliance is now picking up further steam, I guess it's going to rub off a bit on the index as well. Tech Mahindra holds up, Maruti up in the green, HDFC Bank is seeing green. ITC is a very steady performer today. That's holding up roughly about 1%. Axis Bank is down 1.5%. I want to quickly check in on what an ICICI Bank as well is up to. That stock should come up for you on your screens next. So these are a couple of names which are going to be of interest. Of course, the other ones are BPCL, which should be reacting to its earnings this morning. That's going to be another stock that we are going to be looking out for as we step into trade today. Besides BPCL, a couple of other names that you may want to look out for. You've also got Aurobindo Pharma, remember, wherein the profits jumped about almost 45% in the fourth quarter. Good revenue growth as well. In any case, the tide seems to be favoring the entire pharmaceutical space. So look out for this one as well. And it's going to be important for Bharat Forge today. North America Class 8 truck orders are up on a month-on-month basis, but a decline on the year-on-year basis is what we've seen. So that's another stock to look out for. It's a tentative start, Nikunj. Let's only hope for the best and try and predict that the weather is going to be good. What happens next is much like the cyclone.
It's not looking bad at all. Imagine Nasdaq is 2% away from its all-time high. All-time high on the Nasdaq happened when there was a massive expansion in US economy, hum and drum around buying S&P stocks, Apples and the Microsofts of the world. S&P 500, according to a data point, has seen its biggest rally, uninterrupted rally, in last 50 years. IMF is saying this is the worst economic crisis in the last 100 years, and S&P 500 has seen its biggest rally in last 50 years. So what is going on in the market? Is it only liquidity? And if it is liquidity, then so be it. Because those who are talking about this market running ahead of themselves, I mean, they're getting eggs on the face in the last couple of days, because this market surely is not paying any kind of an attention to all the naysayers who are saying that beware, and valuations and fundamentals are not in sync with the market action. Mark Matthew joins us. Mark, it's just one of those moments where the price action is forcing you to perhaps ask a different question. Are we missing on something? Are markets telling us something which we cannot figure out today?
Well, as you just told us, the markets have been in this incredible rally. They haven't looked back. And I must say, it is incredible, because in the past occasions when you have had very sharp corrections in the S&P, I can cite 3 years technically that look very similar. They were 1962, 1974, and 1987. Very fast collapses in the market. And even after those, it always needed to build a base that took between 2 to 4 months. And I think that's what almost everybody expected this time too. We didn't think the base would be the 23rd of March and we'd never look back. So the explanation must be the liquidity that you also very aptly described. And I think that with these incredibly low interest rates and all of the fiscal and monetary stimulus, the market is willing to look through the lockdowns into next year and even into 2022. And if you do that, if you follow what the consensus assumes, which is 25% earnings growth for next year and 15% earnings growth for 2022, then actually the S&P is a little cheaper than its long-term average. So those are all the reasons I think that we can look back in retrospect and see now why it happened. But certainly if I was talking to you, if we could rewind the clock and it was the 23rd of March, I never would have saw this coming.